and welcome to this week's look at the major news stories affecting the market so far. And what are we going to take a look at? Well, we're going to start with the S&P, and that seems to have reached a bit of a significant resistance level. Secondly, we'll take a look at what happened with the US dollar after this week's release of US CPI figures. Third, we'll take a look at the price of gold, what's been happening there over the last few days and weeks. And we'll finish off, we'll take a look at an individual stock, and that's PepsiCo, obviously a globally known brand. So let's start with the S&P. It seems to have reached a significant resistance level. Back at the end of April, the decline in S&P that we saw, we said around that time that it could be a correction to the lower boundary of the channel, with the possibility of the bulls then attempting another charge and try and breach the 5250 level. Well, Tuesday of this week, May the 14th, the S&P closed at 52.46, thereabouts. Wednesday the 15th, we saw the 52.50 level breached, closing at 53.08 after the CPI figures came out in the US. This occurred after the bullish breakout of the trend line that you can see in red on the chart. So the price has increased well, more than 4.5% since May started, off the back of good earnings reports, a good earnings season in that sense, and of course anticipation of Fed easing their monetary policy. Will it keep going, of course, is the next question. Well, a senior Goldman Sachs analyst is quoted as saying that he is positive in the long term, but, and he notes a couple of points, the S&P has passed Goldman Sachs' target of 5,200 already, and that companies may need to significantly raise their profit forecasts in order for these sort of positive figures to come out. Now, we also saw some PPI data come out earlier this week, which sort of spooked the market initially, but that was settled by Fed Chair Jerome Powell. He basically made a statement and reassured the market, saying that the next Fed move is unlikely to be a hike, and that the PPI data was more mixed than hot. And the market seems to listen to that and recovered slightly. Taking a look at that chart, well, what can we see? The price is moving in the upward channel. The intermediate trend line that you can see in blue dots is providing support to the price as we stand. And in fact, that was tested by that PPI data that came out on Tuesday. The price tested the 5,200 support level. Powell's comments clearly added a little bit of positivity in the market. The CPI figures that came out that we'll talk about in just a moment on Wednesday pushed the market higher, with the belief of the next move being a rate cut. So a little bit of positivity about the market. Obviously, keep your eyes and ears open. There are figures out the rest of this week and next week which could well have an impact. Okay, secondly, we're going to take a look at the dollar, and that has adjusted after the US inflation data that I've hinted at in the first little video there. Wednesday, the CPI figures came out. Core CPI month on month was up 0.3%. That was against an expectation of up 0.4% and the previous figure of up 0.4%. So indication perhaps inflation slowing slightly there. Year on year, it came in at 3.4% up. We expected that, 3.4%, and the previous figure was up 3.5%. Retail sales figures also came out monthly. They were in fact unchanged. We did expect an increase of 0.4%, and the previous figure was up 0.6%. So interesting take on those figures. Well, the result of that was the dollar fell against almost all of the major currencies. The dollar yen retracted from a peak at 156.6. Euro dollar strengthened by more than 100 pips in a very short period of time, within sort of 2 hours of those figures. And sterling against the dollar as well, the buyers there tested significant resistance at 1.27 the figure. So inflation indicates that it's slowing slightly, and Reuters reported that the unchanged retail sales figures suggest conditions are forming for a rate cut. And we do have some figures out Friday with regards to the labour market, and a weak labour market would probably support that theory. Look at each one a little bit closely now. Let's take a look at the dollar yen. Looking at the daily time frame chart, there is a bearish engulfing pattern formed, and confirmation of that pattern will retest 152.8 down to 152 the figure. dollar buyers establish themselves above 154.9, we could see us returning back up to that 156 sort of level, what we've eased off from just recently. In terms of the euro dollar, well, the data led to a test of the resistance at 1.0890. And if we take a look at the weekly time frame, we can see a piercing line pattern formed from about April the 14th. The nearest area for a price rise is 1.0940 to 1.0980. A downward retracement could possibly lead us down to 1.0810 and then down further to 1.0780. As I've said, there is data out that could well impact both of those pairs. Thursday initial jobless claims from the US and the Philadelphia Federal Manufacturing Index comes out from the States. These could well have an impact, dollar yen, and in fact anything trading against the dollar. And on Friday we've also got the Eurozone CPI figure due out, so of course very, very relevant for the euro against the dollar. Could be a bit of volatility, so don't forget your risk management techniques. Okay, our next topic, we're going to have a look at gold, and the gold price is testing an important resistance zone at the moment. Back in April, we said $2,380 per ounce could well become a very, very important resistance zone, and that seems to be coming true. If we take a look at the chart, that shows us that after fading fluctuations, a narrowing consolidation triangle that you can see in green on the chart, the price of gold dropped sharply, that's indicated by the black arrow, on April the 22nd to the 23rd. Second point there is the price then found support in the form of the lower border of the ascending channel that you see in blue, which has been in effect since the beginning of March. This led to a formation of another consolidation pattern between the blue lines that you can see. Also take a look there, the upward breakdown of the red lines on May the 9th could be interpreted as an attempt by the bulls to resume the upward trend within that blue channel. But we can also expect that the green triangle with its axis around $2,380 per ounce could provide further resistance. Now, TA or technical analysis would suggest that the bearish engulfing pattern formed by the blue arrow in the area of the 2380 is showing us exactly that. But of course, fundamental analysis has come into play with the CPI figures and an increase in price closing the Wednesday the 15th at $23.85, $2,385 now, so above that $23.80. Early Thursday morning, that's May the 16th, the price has been up further before easing back to around that same sort of closing level. We're looking around $23.80 to $23.85, $2,380 to $2,385 per troy ounce. So we are seeing a little bit of resistance there. Data coming out again is going to be important. We did see a little bit of a fillip for gold off the back of the figures this week. So again, volatility may well then certainly keep your eyes and ears open to all of the data and figures coming out over the next few days. Okay, we're going to finish off this week with the US equity, and that's PepsiCo, obviously a hugely recognised global brand, but their share price has retracted from its yearly highs. Had a quarterly reporting season obviously, published on April the 23rd. Now that was eagerly anticipated after the FDA in the States had recalled 40 Quaker Oats products as a company owned by PepsiCo due to fears of contamination of some of their products, and that led to a 22% decline in sales volumes for Quaker Oats, and obviously had an impact on PepsiCo itself. However, the quarterly report that came out at the end of April exceeded all expectations. Earnings per share came in at $1.61, that's $1.61 per share, against an expectation of $1.51.8 per share. Gross revenue, that actual figure came in at $18.25 billion US dollar, against an expectation of $18.08 billion. So both over and above expectations. Well, the result of that was PepsiCo reached a yearly high, surpassing $180 per share by April the 25th. So in quick time, really, and clearly a positive situation for the share price. And in fact, on May the 13th, we hit a new high of $181 per share. However, since the start of this week, it has dropped, and has dropped as low as $178.8 per share on the 14th of May. Now, the chart shows the price is in the long-term ascending channel that we can see in blue. And since March, there's been a short-term steeper ascending channel formed that you can see in in green. It's up 10% since March, which may well lead to a bit of profit taking, and in fact Vice President and General Counsel David Flavell sold over 6,000 shares on May the 10th. A little bit of evidence probably there of a bit of profit taking hitting those new levels. Thus it is plausible to assume the stock price is vulnerable to retracement in the short term. Further resistance to growth in the short term could be found by the psychological level at $180 per share. That is going to be quite key, we think, and the median line of the blue channel that you can see. Now, if a correction unfolds, we could decline to the lower boundary of the green channel. That cannot be ruled out. According to tip ranks, however, the average analyst forecast for the price of PepsiCo shares is $190 in 12 months. So, as usual, a little bit of contradictory information. We expect to see that from the markets. As ever, don't forget your risk management techniques, and we wish you luck with your trading in the week ahead. Bye for now.